and silver are about to enter another 2 weeks of absolute garbage time. During this chop, I'm not going to bet on a directional macro move. I would most likely just execute a swing trading strategy, fitting the extreme by selling the reaps and buying the dips. Whether you are a perma bull or a perma bear, you've probably been chopped to pieces by the price action over the last couple of days. Yesterday, gold finally managed to push up to 4,800, only to get instantly slammed right back down to the 4,700 level. These consent fake-outs have become the daily routine. The entire tape is just trading off whatever comes out of Trump's mouth. In the news cycle, it's just aggressively flip-flopping. 1 minute, this trade is open. The next minute is closed. What's even more lethal is oil. Take Brent crude, for example. Even though it dumped 6% yesterday, it's already catching a bid and stabilizing today. If oil doesn't come down, the inflation pressure isn't going anywhere. And plus the latest headline, Trump is not pulling the troops out. So US forces are still stationed right on Iran's doorstep. So here's my macro read. For the next 2 weeks, both gold and silver are stuck in garbage time. Price is just going to aggressively chop back and forth within a tight range. Any directional breakout is like a trap, specifically engineered to slaughter retail traders who chase green candles and panic sell red ones. The biggest edge right now is using sentiment as a contrarian indicator. When the market is euphoric and everyone is screaming for 5,000, that's almost always the local top. And conversely, when pure panic sets in, that's usually a window to buy the blood. Looking at the EBC order flow 12, gold is currently in a massive tug of war right around 4,700. The 4,800 to 5,000 zone above is heavy resistance, loaded with a massive wall of trap loans. Yesterday's pump and dump is the perfect proof of that. The second price tag that zone, break-in sellers and profit takers rush for the exits. And on the downside, the 4,400 to 4,500 zone is critical support. This level is the average accumulation zone for major central banks. If we plunge down there, physical buyers and long-term smart money will step in to aggressively buy the dip and prop up the price. And also, as long as the Middle East conflict isn't fully resolved, safe haven capital won't dare to completely exit the market. And this provides an invisible macro floor for gold. As long as we don't break this range, the sideways chop remains intact. Silver is currently chopping around 75. Upside resistance is rock solid at 78. Downside support at 72 is the absolute line in the sand. If that breaks, you need to watch out for a violent flush lower. My personal playbook is simple: fade extremes. I'm absolutely not trading breakouts. I'm only trading pullbacks and retests. For example, if gold pulls back to like 4,680 and holds, or silver retests like 72 and stabilize, I will step in and execute a long position. And at resistance around 4,800 for gold and 78 for silver, I am looking to short. Right now is garbage time, and it's designed to grind you down. Stop trying to predict every single headline driven tick. Instead, use the volatility to exploit extreme pricing, stepping aggressively at support and take profits ruthlessly at resistance. Patiently wait for the macro catalyst, the starting gun, that will finally break this deadlock. Whether there is a clear rate cut signal for the Fed or a material escalation in geopolitics, as always, this is just my personal trading analysis, not financial advice. And a shout out to EBC Financial Group for sponsoring the content.